Hello, I'm John Hind, Director of Compass Resolution. Today, I have the pleasure and privilege of talking to Heather Dunne from the Pension Experts. Heather has over 37 years of experience as a pension specialist. She initially worked as a small self-administered scheme consultant for directors of their own companies, which gave her an in-depth and practical knowledge of pension actuarial calculations. She then spent 15 years working as a pension transfer specialist, helping advisors with moving funds, pension funds, training and coaching a team and advisors who worked with her. 5 years ago, Heather chose to become a POD, a pension on divorce expert. I'm tripping over my teeth a little bit here, Heather, but let's bear with me because this is live, of course, and continues to work closely with advisors, solicitors, and mediators like myself, helping separating couples to reach fair financial agreements involving pensions. Heather is therefore most definitely an expert in her field and someone to listen to closely when it comes to pensions. Welcome, Heather. Good morning to you.
Good morning, John. It's lovely to be here.
And great to have you here as well.
Yeah, thank you.
So Heather and I will spend the next 25, 30 minutes talking about her pension service and support she can provide separating couples who have chosen to use mediation to reach their own financial agreements. Our hope is that by the end of this conversation, you will have a clear understanding of her service, why it's so important, and how to work with Heather and your mediator as you go through the mediation process, significantly, we hope, improving your chances of reaching a successful financial outcome together. So Heather, here's my first question, and a question for us to talk about to our viewers. When might my separating clients going through mediation need a pensions on divorce expert? Can you talk about that?
Yeah, the simplest way of looking at it is if either of them has got what I call a defined benefit scheme. That's one where they actually promise a certain level of income in retirement, as against what I call a defined contribution scheme, which is the one that's a sort of pot of money. Mm-hmm. So for example, your defined benefit schemes are things like NHS, teachers, those sorts of things, as against your defined contribution, which is something like a personal pension or a SIP or something. And the reason that they need a POD at that point is the value of those promises is actually quite different to the value the actuary of the scheme will put on. So using the transfer value or the cash equivalent transfer value, which is the proper name, is not really a good assessment, a good way of assessing the value of that benefit. And therefore, it means they won't get a fair split if we just rely on that. So they need someone like me who's able to put a value on that actually represents in true numbers. So that's one situation. The other situation where it's really important is if either of them has what I call a SAS, a small self-administered scheme, especially if that's got any unusual investments or anything like that in it. And that will generally be because they've got a small company that either he or she is running and the other party is probably on the books in some way, shape or form. And therefore that will have its own complexities anyway. There's a sort of rule of thumb that if the overall value of pensions is under £100,000, you probably don't need a POD because it's relatively minor part of the overall. But then again, if that £100,000 is more than whatever else they've got, it becomes important again. So it's all very much.
Can I ask you on that £100,000? Does it make a difference whether it is what we call a private scheme or money purchase scheme or a final salary defined benefit scheme? Does it make a difference? I mean, you've got 100,000. Let's say smack on 100,000. One's a private, one's a defined. And I know that the PAG report and so on says, well, maybe you don't. Does it make a difference depending on the type of pension?
It does indeed, because if it is a defined benefit scheme, the value is probably more than the figure, and therefore you go over the 100,000 as soon as I start looking at it. So that then makes it relevant. The big problem is that if you don't value the pensions properly, you're not taking them into account properly in the overall settlement, and that means it's not going to be fair. And that might lead to difficulties in the future. And I know one of the concerns is there's a cost in putting in place a pensions on divorce expert, but the long-term saving far outweighs that. And
It could really do, couldn't it? I mean, it could be
yeah.
a real mistake. So I mean, I tend to work with my clients, begin with the end in mind. Let's begin that we're working towards. When I say to my separating couple I'm working with in mediation, I'm guessing, guys, you want to reach a fair outcome. Who doesn't? Well, what they mean by fair may be something different. But generally, people say they recognize, they acknowledge that if they are going to reach a fair agreement, they need to be able to make fully informed decisions. They need to understand what they're working with. Now, most people, of course, can clearly understand what a house is, what money in a bank is, what an ISA is. When it comes to pensions, as you said, it's never quite as straightforward as it might seem. So you might get this. I'll go back to CEV if you like, the cash equivalent value. They might go and get and present me as a family mediator. They say we've got our values of our pensions, we've got cash equivalent values. What's wrong with those? Why aren't they representative of what there is? Because most people say, I've got 100,000 or 150,000, there it is. But I guess it depends. And let me just give you a very clear scenario here that you might say, this is where they would definitely need it. So very typically, in kind of what I call medium money cases, where there is only a finite amount of resources that needs to be stretched between them. And part of that package of resources includes a bunch of pensions. And the husband and wife say, look, or the wife might say, or the husband might say, I want to keep more of the house and I'll give you more of the pensions. How do they compare a pension with a house without some expert input, as I say to them? What would you say to them about that kind of scenario, kind of offsetting, as we call it, offsetting one against the other? Why not for that?
Yes, I totally agree. It's not something that you can directly compare, because cash at bank is available now, where your pension is probably not available until you're 55, or it could even be 58 because the minimum's changing soon. And those sorts of things make a big difference. But the other thing is the cash equivalent transfer value is what the scheme actuary thinks he needs within the scheme to provide that level of benefit. And that in itself is based on actuarial assumptions, estimates of RPI, CPI, so inflation, and estimates of potential investment return within the scheme, and the cost of actually providing the benefits. And one of the factors that has to be borne in mind is that within a scheme, it's much cheaper to provide the pension than it is in the alternative, the annuity world, which is what we do within a money purchase pot or a defined contribution scheme, as I call them, where you have to actually purchase an annuity when you retire, and the cost of that will be much higher than providing the same level of income from a defined benefit scheme. So that in itself means that if one party has got a defined benefit scheme, the value is probably much larger than the CETV.
So if they were to take the benefits of that final salary pension pays them on retirement, go into the private pension market and say, insurance company, I want to buy the same benefits that other pension has. The cost cash they need to put into a private pension is going to be, you believe, a lot higher than it would be to get the same benefits that final salary might be, which is
absolutely one of the key things. And that is skewed even further when you look at the public sector schemes like your NHS teachers, because there's a combination of the actuarial assessment is affected by political requirements and the fact that they're actually funded through the Treasury and the taxpayer. And so there's a requirement for them to keep the cost down, which means they tend to be lower transfer values than a comparative private defined benefit scheme, say your BPs, Shells, Barclays and the like. So those are factors too. The other thing is that many of these schemes will provide the benefits at different ages. So, I mean, just taking your public sector ones, they've moved the retirement ages. And of course, they've done the same in the private sector to reduce the cost of these schemes. So all of those things impact on the value of the benefits in terms of how much they could actually have at what I call the equivalence age, because normally we try and work to, say, one retirement age as being they both want to take their benefits at that point, and that will affect it. The other factor with that, of course, is there could be an age differential. It's not that unusual for husbands and wives to be different ages, you know. Also, one of the factors within the defined benefit schemes is they are still allowed to allow for the fact that ladies live for longer, statistically.
Is it 83 and 79, I think it is, or something at the moment?
The latest ones I've seen are 84 and 87. So the men last to 84
I've got a bit
and the
longer.
men. Yes, you've got a little bit longer. That's right, exactly. Yes, I always say us ladies last longer, but we fall apart in the process. You know, it's the
no comment.
Yeah, absolutely. So all of those things have to be considered. And of course, the other factor that's people don't always appreciate is, as I've said, there's a distinction between your transfer value from your public sector scheme as against your private sector scheme. But even two private sector schemes, the two actuaries will come up with different numbers. And to prove that, when the actuary is changed, which they are every now and then, because the scheme administrators look for new consultants to work with, they've changed the scheme actuary, and the actuary will come up with an entirely different calculation basis for the transfer values. So I think the point is that the actuary is doing a reasonable assessment. I'm not saying that he's doing it wrong. It's just that it's very specific to each scheme.
For a particular purpose.
Or a particular purpose, absolutely. And that's why they're looking at what's cost buying the scheme. And we're looking at what's the value of that benefit for sharing purposes.
Yes,
so
indeed.
So it is a different thing. Yeah.
So it's a different objective, different purpose.
Yep.
So let me put this together. Essentially, my clients have got hold of their initial cash equivalent values, their pensions. I've sent them off with the Form P, and they've done that. And the big message I'm hearing here and coming out of this conversation is that's very rarely the end of the story, especially where pensioners tend to be over £100,000. Be wary; it's a minefield. So why use a POD, a pension and divorce expert, as opposed to some normal IFA, financial advisor? So why would my clients use you?
Yeah. There's quite a big distinction in our purpose and our situation in terms of what we're required to do. Your IFA, your financial advisor, is working in the best interests of their individual client. So they will be looking for what's the right thing for that client to do for their long-term financial planning, and looking at their personal circumstances and where they're trying to go and what they're trying to achieve. So generally, when you're a couple, of course, you have a financial advisor that looks after both of you, because you tend to be planning to move forward together. Obviously, in a divorce scenario, you're planning to move forward separately. And at that point, you need to consider the best interests of one party may differ to the best interests of the other party.
Well, as a mediator, of course, I'm managing it all the time.
Absolutely.
And I'll come back to in a minute about maybe using you as a neutral or as a report or so on. But no, sorry, I'll let you continue, but I'll come back to that.
Yeah.
It's an important theme.
So, yes. So the financial advisor has a role in the divorce scenario, because they can help with that, evaluating the other assets, the non-pension assets, the ISAs, as you mentioned, and the property, but also all the other investments they may have, which need to be considered. And also working out what is the best, because though the physical cash value of something may be, so much, there's an emotional aspect. There's also a what am I trying to achieve? Which is the best way for me to do that?
What are
And
my priorities? What are my
absolutely.
priorities? Yeah.
And the advisor may be able to help with that. And of course, the tax implications, which are numerous and complex, which is why that's what they do.
So
that's
the holistic, so the financial advisors taking the holistic approach, working
absolutely.
with okay, and then you can come in with your pension specific expertise. So I'll bring you in again. Sorry, I'll keep
no,
you.
no, it's all right. Sorry, it's my problem.
Oh, you're frozen.
Yes, absolutely. It's my turn to freeze, is it?
No,
I come back now.
you're okay now. You're back now. Yeah.
Yeah, good. Right. So the right. My role is I'm usually appointed as what's called a single joint expert. So I work impartially for both parties. I'm not biased, and I mustn't be biased to either party.
Mm-hmm.
And that's a requirement that's imposed on me by the court. So it's an entirely different angle than the advisor. My role is to assess what both parties have and then work out what is a fair split. I will be given instructions as to which age they're trying to look at a fair split at, because it will make a difference if I'm looking at age 60 or state retirement age, which of course could be 67, 66, 68. It's a moving goalpost. And the values of the benefits in today's terms will differ depending on which age I'm looking at. So it's key that we get that aspect agreed at the outset, so that we don't end up with 14 different numbers, which just makes confusion rather than helping.
So let me bring myself in, my point up in here, because I work exclusively with clients who are trying to work together to try and reach a fair solution together. So there is no court involvement. So you mentioned the single joint expert, which of course is if two lawyers were leading the process and representing their client and then putting together instructions and instructing you. But let's say there are no court. I'm having more and more clients where there's no court proceedings. They want to reach a fair financial outcome, which has a significant pension element to it. Can I just talk about how you might be involved then within the mediation process? Would it make sense? This is my question. Would it make sense? Now, I've had maybe my first joint meeting with them. We've established that they need a pension expert to support them to make the decisions they need to make, to explore their options. Would you want to be brought in at the instruction stage? What are they asking you for, to have that conversation with them, or not? Or would you? How would you see yourself coming at what stage of the media? What stage would you want to be involved in?
Yes.
Yeah.
The answer is, to a certain extent, as soon as possible.
Yeah.
Because there's a time delay, because I have to get certain information from the schemes.
Yes.
And schemes don't always provide that information as quickly as we'd quite like,
No, indeed. Indeed. No.
So the sooner we start, the sooner I might be able to get to the end and then be able to give you some feedback that's relevance in the mediation process. From that point of view, it's good to be in at the beginning. In terms of discussions, because of the impartiality requirement, I tend to prefer to undertake the discussions by email, because then I can copy everybody in and nobody thinks that anybody's heard anything different. I also find that helps with making sure there's no concerns, on either side, and that they both feel comfortable. And that is so important throughout this, which is because it can be quite a traumatic process.
Absolutely.
So I generally work on the basis of contacting both parties and copying in the mediator, so they know what's going on too, and they're fully involved. And I ask the parties to complete what I call it's like the letter of instruction that the solicitors would give me. And what I've done is I've prepared a Word document that they can fill in and sign. So they can put in all the details they need to put in, and it tells them what details I need to know, so that it's as easy as possible, because obviously I do this all the time, but they don't.
And I guess also a letter of authority you'd need from them as well, so you can obtain any information you need from them as well. Maybe
absolutely. I usually ask, because the mediators will almost certainly have had some sort of values, because part of your process is looking at is there enough, do I need to actually put in place a code,
Yes.
So for that very question, you'll have got some sort of values. So I ask for copies of whatever you've already got, because I can usually find quite a lot out from that, because it's written in pension and I speak pension quite well. And not many clients do, poor souls. The other thing is, as you say, absolutely, a letter of authority. And I'll need a letter of authority for each individual scheme. And one of the things that causes a little bit of confusion is I actually need a letter of authority with a written signature on it. I can't have one of these digital signatures. Or a client the other day, what they did was they carefully wrote it on a piece of paper and then scanned it on. But the insurance companies and the schemes, they won't accept that. They need an original signature. Ridiculous thing being, they're quite happy to have a scanned copy with an original signature. So it's a bit strange. At least they have got to the point where they'll accept a scanned copy nowadays. Not that long ago, it used to be a physical letter.
Yes.
Yeah, that's one of the advantages of COVID. It's about the only one I know of.
And of course, people have become more comfortable with doing things online and so on.
Absolutely, yes.
So can I just kind of reflect back where we are with the process? Because I'm thinking that I'm now got a client, a couple of I'm working with, a separated couple in mediation. I've had my 2 separate meetings with them, and I've established there is a pension element in all the other things I'm working with. We've had our first mediation session, and they have decided, with my help, having been employed for many years, I can generally help them with kind of get a sense of whether they need an expert or pension expert. Yeah. So they've decided that they would like to be able to explore the option of pension sharing the pensions, and or pension offsetting. And I think what you're saying is, and I think I understand you correctly, but look, tell me if I'm wrong. You would then, if I said to them, if they decided then they wanted to instruct Heather Dunne, the pension experts, I would put them in contact with you. You would then engage with them in email. They would both get the same email from you as a way of containing structured transparency, openness, and so on. And then off that would go. You'd obviously send them your terms of business, tell them what information you needed, and you would need to be very clear about what they were asking you to do. And you have a letter of instruction, kind of template that you can send them. And actually, if they need my help as a mediator to work with that, I would be happy to help them with that as well. And then you get the instruction, you get the letter of authorities from them, which have to be signed in hand, not digitally, and off you go. And then you can obviously get engaged with them and get on and make sure you've got all the information that you need from them and prepare that report. And if you do need to prepare that report, can you give them some idea? Because we're coming to pretty much the end of this meeting. Give some idea how long and how much it might take in terms.
Yeah,
absolutely. I know it'll vary.
Yeah, I personally work on a fixed fee basis, so it's £1,700 plus VAT, which becomes 2,040 because of the VAT, which means it's 1,020 each, because I split the bill equally. So that's my fee, and I invoice that once I've issued the report. So that's that aspect of it. In terms of the process, what I will do, as I say, is I will go through whatever information they've already got, submit the letters of authority to the schemes to get any extra details I need. That's the bit that may take time, because sometimes the schemes take a little while to come back. I will follow up and chase, and I will endeavour to keep you updated as to, I've had another look at it today and I've done this, so something's happening. It hasn't disappeared in a black hole. And then once I've got all the information, I will undertake the computations. I usually say it takes a week to 2 weeks to do the computations, and then another week to 2 weeks to actually prepare the report. Again, I'll try and keep you updated during that process. The reason I've got that sort of somewhat vague week to 2 weeks is there's only me.
Of course.
And on occasions, I've got 5 to do, and on occasions, I've got none. And on occasions, I'll do this mad thing.
I was going to say, Heather, that actually that's quite quick from my experience of, because we're all busy. You're busy, and pension experts tend to be busy. So now I think that's a good time frame. So we've got the costs. We know roughly how long, and obviously, there are variables because you're working with other organisations that provide information. We can't control them, of course. They have to provide it. and then they get their report. Do you offer any kind of service? So they've got their report, and sometimes it might need a bit of explanation.
Yes.
So they need to understand the report, and then I can help them apply it and look at their options. What kind of help might you give them in terms of if they've got questions about the report, understand that?
Yeah. I am open to being asked questions via email, obviously, again, because, if one's asking, the other one probably wants to ask the same question, and then I can answer both at the same time. I have also, on occasion, if it's helpful, attended a subsequent mediation meeting and had a brief chat with them, usually by Zoom, because that way we can all do it fairly easily and it doesn't take up an enormous amount of time. But that usually works quite well. Obviously, most of those questions I consider as part of the overall fee, because it's just basics around what I've said. But if they suddenly decide they want me to do a whole set of extra calculations,
absolutely broaden their instructions. And they want to do extra work, of course, then you say, I'm happy to do that, but I'm afraid it would cost you this for these reasons.
Absolutely.
Very fair. Very fair.
Yeah. I mean, my thinking is that, I'm trying to attempt to help these people through their process, and I will do my best to endeavour to explain everything pensiony, which is my area. But sometimes the important thing, I think, at any stage with a POD is to actually be clear what it is you're trying to achieve. Which age are you trying to get to? And are you looking at pension sharing, or are you looking at offsetting? And to a certain extent, don't ask for stuff you actually don't want. Because whoever you're instructing, that's going to impact on the cost.
So can I bring this to an end by focusing on that very beginning stage? Because so much, as you say, depends on having that clarity to start with. Otherwise, as I said about computers, rubbish in, rubbish out. You need to be clear about what you're asking for. So just a thought, you say, and it's being very flexible, by that's great. You might be prepared to come in with a managed Zoom meeting, maybe with me facilitating it, to answer some questions and to help them understand it. And maybe perhaps at the early stage of getting your instructions, so then helping them be clear about what they're going to ask you. It may be in some cases, I'm thinking it'd be really useful to have Heather here for 15, 20 minutes to maybe help them as the decision makers to be clear about what they're asking for and why, because they're going to be spending that. Do you think that might be helpful as well? I
do think it. I think it would be extremely helpful. And yes, it's something I'm more than willing to do, because it makes the whole process so much more valuable to them.
Absolutely. And we can talk about that, because I'm guessing that you would be interested in that turning obviously into an instruction. You're not going to be doing lots of half-an-hour meetings, because otherwise you'd tie your whole time up doing these. But that's certainly something interesting from my point of view, because if we are, you and I as the professionals, and maybe other professionals, are looking to help this couple reach fair financial outcomes together, which include pensions. We've talked about that financial advisor. So typically in my world, I might be helping them to communicate, make decisions together. They might need to support them. They might need a financial advisor working in that holistic way with all the information. And if there is a pension element, or a significant pension element for you, then we'd bring you in. And there's the team. So in terms of the mediation team, and I can definitely see how that would work and actually be very cost effective. As we've been talking about your fees as well.
Absolutely. I mean, because if we can end up with a clear instruction and they're agreed before we start, what you end up with is a POD report that doesn't say, well, if you do it this way, it's that much. If you do it that way, it's this much, which just ends up with a whole series of numbers and nobody knows what they all mean.
Absolutely. Focused mind is
absolutely. And then the report they get actually suits what they're trying to do. And
a good place to end, I think, Heather. Look, Heather, I mean, this always feels a bit rushed. I'm conscious that we need to give the kind of the viewer a fairly. What I'll do with this, and what I normally do with this interview or this conversation, I'll put it onto the website. And by the way, talking about websites, just before we go, everyone out there, you can find Heather's contact details on the Compass Resolution site, but she can also be found through the Pensions Expert website, and I'll give you that. But just before we go, what's the email or the website address? What's the best way to contact you? Perhaps some details there.
The best way to contact me is the email, which is heather@pensionsexperts.co.uk.
Heather at pensions, plural S, expert at .co.uk.
Yes.
Brilliant.
Yes.
I mean, I don't want to confuse them. That's great. That's really clear. Thank you very much, Heather. Thank you very much for your time. I know it's really valuable, and I've enjoyed this, and it's really clear to me now what you offer, why you offer it, why you differ from other financial advisors and so on. And I think it gives the viewers, the clients, separating clients, a kind of bit of a clarity about the pathway, the process, and the costs and so on, which I think most people, separating couples, need nowadays. They need an idea of how long it's going to take and the process and the cost. So I think you've really been really clear with that. So thank you very much again. Thanks for your time, and it's been fun. It's been interesting as well. Thank you.
Thank you, John. Thanks for your time.
Thank you so much.
Thank you.